All right, folks, welcome back to another episode of Market Moves Unleashed, where we decode the chaos in crypto and stock markets to help you navigate your trades with precision. I'm your host, Alex, and today we're digging into some serious technical ground here, analyzing the latest weekly reports and trying to predict the next big move before the market does. So, buckle up. We're looking at 3 pivotal weeks of ETH USDT movement, all driven by our good old friend, the Stock RSI strategy. Let's jump right in. First stop, September 29th, 2025 report. Report timestamp? 105 Zulu, so fresh off the press. ETH USDT was our star performer yet again. The strategy? Stock RSI, aiming to catch those oversold bounces like a pro. Here's how the price shook out over those key days. Started around 4,591, fell steadily down to 4,154. Midpoint check. October 6th, 2025 report. Same beast, different dance floor. Trading pair unchanged, still riding that ETH USDT roller coaster. Again, powered by the trusty Stock RSI engine. Price action this time played out beautifully. Started recovery at 4,154. Climbed through 4,345. Hit peak of 4,493. Holy green candles, Batman. Now that's what we call a strong buy. This wasn't a whisper, it was a shout. We advised entering at the start of the rally, the very familiar $4,154, which paid off nicely with a juicy target zone just short of $4,500, while keeping risk capped under 3,820. Biggest takeaway? The risk management advice was clear. Position size under 5%. Maximum drawdown per trade kept below 2%. Don't bet the farm unless you like sleeping rough. Still, solid fundamentals held the course. Despite lingering momentum doubts, buyers pushed hard and made their mark. Now comes the exciting part. Hold tight. Climactic twist. October 13, 2025. Report. Another weekly update drops, and guess what happens? We see volatility rear its head once more in ETH USDT land. Our entry point this week? Slipped slightly down to $4,137.40 after a brief hiccup midweek. Prices had surged past 4,500, touched 4,526. They plummeted lower to close out the session at $4,137. So naturally, the call? Strong buy again? Yep. Target this round hit even further, to a bold 4,937, protected with a stop placed firmly at 3,737. Wait, how could that be justified? Well, my friends, the setup had solid backing this go-around too. MACD still holding bullish territory though losing steam. That long-term 50-week SMA acting as cushion somewhere near 3,105. No nasty bulltrap volume spikes seen on chart patterns, yet risk remained elevated. That high ATR, 400 points, demanded careful footwork. Meanwhile, MACD signaled weakening drive. ADX hinted fading trend heat. We had reasons to stay cautious beneath the surface. All right, drumroll please. Predicting the next step. Time to fast forward. Because if you haven't figured it out already, we ain't fortune tellers, but dang close sometimes. Based on these last few swings, bull runs followed by retracements with similar intensity, I believe history could repeat itself soon. Let's consider a couple trends shaping up today. Volatility is alive. With such steep moves both ways within short intervals, expect wilder rides ahead. Especially given the narrowing range between bounce points and drop floors, it's compression building pressure. If daily charts reflect continued resilience at the $4,100 to $4,200 base, combined with rekindled MACD cross potential, brace yourself, traders. Another thrust higher might be incoming. Stochastic oversold clues are lining up again. Recent drops dipped us below 20 on Stock RSI. Classic buy signal territory. If accompanied by renewed volume uptick and minor EMA alignment favoring upward bias, then maybe the next weekly call will echo one phrase: strong buy yet again. possibly targeting new highs above $5,000 before year end. On the flip side, if sellers push lower, breaking previous lows decisively below $3,800 level stops, well, the mood might turn sour real quick. So what should you do until the actual report arrives? Stay flexible. Set alerts at key pivot zones. Protect profits wisely. Trade smart, not greedy. Until next time, keep watching, keep winning, and may your charts stay green. Catch you in the next trade war room. Peace.